Hello, welcome back. So Alphabet reported for the quarter and it looks like it's crashing earnings. You will see here that after market, the price of the stock is up almost 9% and approaching 3,000. And that's absolutely insane. Google has been doing tremendously well, obviously, and you see over here that the stock price has been climbing up pretty much every day with a little bit of slump over here where pretty much every stock actually went down during this downturn in the beginning of 2022. But generally speaking, the stock has been climbing and climbing, and the company has been doing better and better. And that may actually be a push for the Nasdaq as well. And you will see here that the company's 1-year growth is 43%, which is massive. And we're gonna take a little bit of a look at the financials of the company, see whether it's actually worth it for us to buy now, to enter right now in this market where Alphabet is actually approaching 3,000, and it's very, very close to its all-time highs, really, isn't it? So yeah, let's take a little bit of a closer look here. The outstanding shares of the company are not too many, but they have announced that they're going to be splitting because I guess the value of the stock is very, very high right now. And so they are splitting, I think it was like 20 to 1 or something of that sort. But you will see here that there is basically no massive increase really or anything in terms of the stock float and their outstanding shares. It's basically the same thing. This looks like it was the previous slip basically. But yeah, there is no real trouble here with the outstanding shares count. And interesting to notice that increases in the analyst estimates here are pretty vast for 2021 and 2022, 2023 also pretty okay. I mean, the company is a behemoth really right now, and so you cannot expect massive growth. But the company is not paying any dividends here. But let's take a little bit of a closer look at the income statement of the company, see how they are doing. And obviously, we always take it back to about 5 years. That works best. And notice the year-over-year growth here. It's insane. And the last 12 months, it's actually increased the most from its previous year. So Google is doing really, really well, it looks like. Same with the gross profit here. And let's take a look at the net income. Net income of the company from 12 billion in 2017 to 70 in the last 12 months. That's massive increase. So yeah, the company is doing amazingly well here. And the balance sheet of the company here, you'll see that the total assets are 347 billion, liabilities of 102 billion here, and total equity $244 billion, up from 152. So the company is basically making money hand over fist here, and so they're doing really well. Cash flow, cash from operations from 37 billion to 90 almost, or 89. And cash from investing, the company is investing a little bit in capital expenditures here and investment in market securities, a little bit, some acquisitions, normal stuff. Cash from financing, again, repaying debt, repurchasing stock, very important. Very nice to see that actually. Google thinks that their stock is actually underpriced, so they're repurchasing, and that helps investors as well. And free cash flow, 23 billion, 22, 30, 42, 65. For almost 66. That's massive. That's a massive increase, really. Now, their market cap is almost 2 trillion here, as you can see. So it's very high. And if you think that the cash flow right now, the average 5-year cash flow is what? Like maybe this is let's say about $50 billion here. You give it a multiple of 20, and you're gonna get $1 trillion here. So we're a little bit lower than what I would expect. Yet we're looking about a company. We're looking for a company that's actually making tons of cash flow, and it's growing like hell here. And this kind of increase here will actually bring the market cap a little bit higher, probably close to 2 trillion here. And the cash flow is not enough to justify the actual valuation here. If you want to get it in order to make money, really, because that's what we're talking about. But let's take a little bit of a closer look here. Yeah, the multiples are a little bit inflated as well. You're kind of looking at a 1 to 3 for great multiples over here. Enterprise value of the company, very similar actually to the market capitalization, so not massive changes. But the return on equity is very hot here, 30%. And return on assets, 14%, growing very well. And 11% debt to equity, that's like nothing. Very little debt from the company. And actually, I think the debt was like what, 100 billion, something of that sort, 100 million. Let me go back actually and check in the balance sheet here. The total liabilities is what we want to see. Let me find it. Total liabilities, $102 billion. So $102 billion is the total liabilities. They're making 65. They made like 65 last year in terms of free cash flow. So in less than 2 years, they can pay all their debt and be done with it if they wanted to. So basically, they have no troubles with in terms of debt, like zero at all. They're a money printing machine, really, to tell you the truth. So everything is looking great here in terms of finances and how the company is doing overall. So what am I doing is the question with Alphabet. Am I buying in these levels? Now, it is a little bit expensive, yes. The thing is, it's Google seems to be growing massively and insanely enough. As you notice here in the income statement, the year-over-year growth of 2000, like the last 12 months, has been massive, much more than the previous years. So the company seems to be doing better and better. So love to see that. And that's actually some pretty good growth here. That's not insignificant. That's a very, very significant growth here. So if I were to buy Google here or Alphabet, however you want to call it, I think I would enter I would definitely want to enter the stock. I just would want to get it at a better price again because it is going higher and higher after this current market beat. I think I want to wait it out a little bit and wait for a downturn in order to buy. Maybe actually buy a little bit before the split even because they have announced the split, and typically the split tends to go up in terms of price for a stock and a company. So maybe I would want to buy a little bit there, but typically I'm seeing that Google will actually keep on growing its value here, and I'm not sure whether it's actually worth it for an investor to actually buy it here just because it's a little bit inflated, and maybe it's a little bit of a better idea to wait it out a little bit, wait for like a 10% drop or something of that sort that will happen at some point, and buy it then maybe, just because it is a little bit inflated. The company is amazing, obviously, it's super amazing, yet I'm a little bit fearful of spending that much and being a little bit overpriced based on the current market cap and the free cash flow that the company is making. We're looking at about a 40 PE, actually not PE, a 40 price to cash flow ratio. If we're actually purchasing right now, it's probably a little bit more than 40 after this increase here. So it's a little bit expensive. However, the company is amazing. So again, if you get a chance to buy it at a downturn, I would. And it looks like a fantastic opportunity here. So hope you enjoyed the video. If you did, please leave a like and subscribe. And I'd love to see you in our Discord channel. We already have more than 10 people there. And we're waiting for you to come over and join us in our discussions. You can find the link in the description box below. And in the meantime, you can take a look at this video that I made a little bit earlier. And it's about Alibaba. Take a look at it, and I'll see you hopefully on Discord or in another video. See you around. Bye-bye.